Welcome to OneOnOneTrading.com. My name is Troy Epperson, and we're going to cover the chart of the week in a video here to explain a little bit more in depth. This is the ES. The date is 4/24/2019, and it's a 5-minute chart. So this is a little bit different chart than what we normally do, where I'm showing you a trade. Here we're going to show you a particular time zone that is very, very difficult to trade. The opening 15 minutes can be absolutely treacherous, and in this case, price gyrated down like 13 ticks, up 14 ticks, and then back down 12 ticks. So, I mean, just in the course of 3 bars, going straight down, then straight up, then straight down again. And this is very indicative of the first 15 minutes of the market when it first opens. I call this zone 1, and it's very, very treacherous. And there's a bunch of reasons why this actually happens. First of all, we have overnight sentiment. Okay, so an example of this was some type of news items that happens overnight. So maybe the trade wars with China, the trade tariffs, something comes out that's very positive. And so the general public overnight sees all this positive news after the 5 o'clock news, 6 o'clock news, and 11 o'clock news, whatever, and they put in orders to buy stock the next day. And this creates excessive demand that has to be dealt with all at the open. And sometimes this can cause gaps at the open and wild trading in the first few bars, down, up, down, etc. Also, what's simultaneously happening is the big funds, I call it settlement and deployment, pension funds, mutual funds. When somebody withdraws money out of a mutual fund, they have to sell stock to raise that cash to give to you whenever you cash something out. And they usually do this on the open or very close to the open and at the close of the day, depending on the fund and what their rules are. Now, when they do that, they're just doing, it's basically just an accounting issue. They don't care whether the market's going up or down. They just have to do an accounting. So money comes in, they have to put it to work. They're going to buy. They don't care if the market's going up or going down. They just have to put the money in play. If they need to take money out of play, they're going to sell in order to raise that cash to go out to their investors. So due to this fund settlement / deployment happens many times at the beginning of the market and at the close, we also get crazy stuff that has nothing to do with the sentiment of whether the market's going up or down. It's basically just an accounting issue and hasn't anything to do with direction. So all these things are happening simultaneously, and this makes the first 15 minutes of the market every day all over the place. I consider it complete monkey business because you're unable to tell what's happening, what direction is the market going. No idea. Down, say, down 13, up 14, down 12. Crazy. Once this opening rush is done and the rebalancing is finished, the market will sort of settle down and start the normal process of price discovery at a much slower pace. Now, see, I personally completely avoid the first 15 minutes as price prediction is extremely difficult. Learn to trade, OneOnOneTrading.com.